Next, I want to share with you how to grow your wealth exponentially. The reason that real estate wealth growth blows away the stock market, as I said before, is because of the 5 economic benefits. But let me explain this to you and show you in a presentation of the exponential wealth growth caused by these 5 economic benefits, as opposed to the linear wealth growth of saving money in the bank or the stock market. So let's say you have $1. So the red chip represents your money. You put $1 in the bank. Now, as you know, interest rates are incredibly low. The interest return on money in the bank is like next to nothing. It's next to zero. But let's say for simplicity, you get 1%. So $1 in the bank, and let's say you got 1% would be 1 cent. You're not even going to get that. This is your return. Now, this is what's called linear wealth growth, meaning a straight line. Here are the problems with it. There are 3 significant problems. First problem is that the return is so low, it's just, like I said, it's even less than 1%. That's the first problem. Here's the second problem, is the reality is you're actually losing money because you're not making money to keep enough money to keep up with inflation. If inflation is running 2.5%, 3%, and you're getting less than 1%, you're actually going backwards. But here's the third problem and why I created this presentation. It is the biggest problem, and it is the monumental blind side that most people have because they have no awareness. And remember I said you don't know what you don't know? Let me show you what you don't know. It's linear wealth growth, meaning you're only growing money on your money. And you're going it alone and you're saving money. Now, let me give you another example of that. Let's say you put $1 into your retirement account. And let's say you get 8%. So $1, 8%. Way better than the bank. But it still has the huge problem of linear wealth growth. You're only making money on your money and the money that you save. You know, when I do these consumer presentations, and we'll have a hotel room full of people, and I ask them this question. How many of you believe people are getting wealthy through a 401k or IRA saving this way? How many people do you think raise their hand? No one. They know they're not going to get wealthy. This is at best a band-aid for survival. We don't want to do, you want to do what the wealthy do. And the wealthy do what I call exponential wealth growth, and I'll show you what I'm talking about. You put $1, so same as these scenarios, and you buy a $10 property. So 10% down, here's your $1. We get borrowed $9 from the bank, so here's 2, 4, 6, 8, 9. So 10% down, $9 from the bank. This is the leverage factor. So here's what's awesome about this to get started. First off, you bought a $10 property. So where do you think you're going to make more money, on a $10 asset or a $1 asset? Well, it's pretty obvious, right? That's the first thing that's awesome. Second thing is that would you loan somebody 90% of the money to buy a property and get zero ownership, zero partnership in the property? No, I wouldn't do it either. But that's what banks do every single day. They will loan you 90, 95, 97%, in some cases 100%, and they don't own any of the property. You'll own 100% of it. They just have a contract where they're going to make some interest on the money, which in today's world isn't very much. Now, this is the first economic benefit of leverage. Now, we're going to use 8% in the stock market versus 5% in real estate. So we're slanting the deck in favor of the stock market. Stock market getting 8%, real estate's only going to get a 5% return, not the 7.3. So 5% of $1, 5% of $1 is 5 cents. 5% of $10 is 50 cents. So let me show you what that looks like. There's 10. Yep, there's 10. 20. 30. 40. And 50. Now, we've only covered 2 economic benefits. Leverage, which is the bank's money, and appreciation. And we've already blown away the stock market or your 401k. It's not even close. There are 3 more economic benefits. Now, I showed you those other 3 benefits if you were here live. I give you a free book if you can name one of the other ones. So here's the next one. Tax benefits, the tax write-offs on real estate. Significant tax advantages. When you see the difference in tax advantage that real estate has over your 401k, it will blow your mind what it means in dollars and cents. Third is principal reduction. Every time you make a payment, a big percentage of it, and right now it's about 35%, 35%, depending on the rate, and growing every time the rate comes down. But as the years go by, the percentage of principal reduction is rising, and if you keep the loan over the life of the loan, the interest rates are so low that the percentage of your payment that's principal reduction is actually more than half. And here's number 5, rental cash flow. Now here's what's so significant about rental cash flow. As I showed you in that chart, rents basically go sideways or up. They almost never go down. And so you have this nice stable income, and that's what you need, especially at time of retirement. But here's the other factor. Remember we talked about the utility value. Here's where real estate is so different from every other asset class. The reality is what you've done here is you have a business. Investing in stocks, you don't have a business. You're at best this passive investor where you have this just insignificant percentage in stock ownership in this company. When you have real estate, whether it's, let's say you take your home and you were to turn that into a rental. Here's the reality is you have a business. Just like a hotel. A hotel is a business, right? What do hotels do? They rent bedrooms and ballrooms. So if you have a property, you buy a home, you turn it into a rental, now you're basically in the hotel business and you're renting bedrooms and bathrooms in that. But here's the benefit of being a business. You have these tax benefits. Being a business, you can borrow money. So you can use the asset and you can borrow this money. And so now you're creating all these advantages, and here's the biggest advantage. You have a customer. Who's the customer? We call them a tenant or a renter. They're paying you rent. You take their money that you're collecting and you pay off your loan. And say that again. Their money pays off your loan. So if you were to borrow 90% of the money to buy an asset and get somebody else to pay off your loan, didn't this money become free? There's no other way to secure free money than real estate. How much free money do you think you should secure in your lifetime? Well, the obvious answer is as much as possible. The more free money you secure in learning these wealth growth principles, the faster you're going to become wealthy and be able to retire or just live the life that you want to live.